Let's pick up on the markets now. The rand falling this week after making strong gains since the beginning of June, partly because of the easing power cuts, which have improved investor sentiment. Matete Thulare is Rand Merchant Bank's foreign exchange institution, and he joins us now for a quick update on the performance at the JSE. Mr. Thulare, good morning to you. Let's pick up on the rand, which has fallen about 1% against the US dollar, a much stronger US dollar, might I add. This as the spate of interest rates by the several central banks fueled the worries about global growth. Talk us through the rand's trajectory for this week.
Good morning, Dolly. I suppose, look, it is fears over the faster global rate hikes, the lack of Chinese stimulus, the unwinding of risk assets, and this has pushed the rand back to 1861, and it is keeping the bias for a weaker rand into the weekends. Now, there's been much faster and more persistent central bank hikes over the past few days. We've seen surprise 50 basis point hikes in the UK, in the Norway region, and also a hawkish talk from the Swiss National Bank as well. I mean, this is underscoring last week's hawkish talk from the Fed and also the ECB. Now, it feels like the sharp global risk off that we're seeing at the moment is because of the rate summit that looks further once again. I mean, it looks like despite the Chinese stimulus, despite everything that we think is positive from a market perspective, even the data sets, the markets are starting to worry. This is why you're seeing the risk and the commodity currencies taking a bit of a hit, and this is why you're also seeing the rand weaken somewhat. And I suppose the bias going into this weekend will be for a weaker rand. And obviously, as we go into month and into quarter end, also you will find that there will be some unwinding of risk positions as people square off for the half year end as well.
Let's talk commodities. Oil prices falling for a second straight session, and we're headed for a weekly decline of more than 3% today. What's driving market sentiment there?
So look, in the commodity space, especially after the Federal Reserve obviously signaled further hikes that were needed, this is bruising the risk appetite and also strengthening the dollar and also raising the prospect of an economic slowdown. Already there's worries and jitters about a potential U.S. recession, a Chinese recession, and obviously in Asia, the markets are starting to gauge whether the prospect for demand in China, which is the largest oil importer, whether that stimulus that we've seen this week is enough to aid growth and obviously increase growth. There's concerns that this may not be enough. Already the drop in the price comes despite OPEC Plus, trying to already cut production, and also despite all of this, there is some sort of positives in the market already. In the U.S., you are seeing that the total oil product supplied, which is a proxy for demand, it is at its highest since December. The likes of jet fuel consumption, it is on a 4-week average at its highest since last year summer. The oil market at this point in time is really torn between the supportive fundamentals and also an uncertain macroeconomic outlook from a global perspective.
Then let's talk ratings agency Moody's, Matete. Now, there's a research report that they've brought out, and it casts doubt on Eskom's measures to improve its energy availability factor. It's a whole laundry list. Let me just cite it for you. They're saying coal supply issues are there, mismanagement, the lack of skills, sabotage, theft, vandalism, among other challenges that are likely to hinder progress at the power utility. What kind of impact will these sentiments have on Moody's next rating review on South Africa?
Yeah, so look, I mean, the energy availability factor, now this is a core measure of performance for Eskom. Now, South Africa has obviously experienced material load shedding in 2022, where we had something like 207 days worth of blackouts just last year. Already you mentioned the laundry list of challenges. I mean, this is obviously something that they have said that this will hinder progress, and already the electricity system at this point in time remains under pressure despite Eskom's efforts to improve the energy availability. We do know that there's been talk about splitting Eskom into the 3 units already. There's talk that this potentially could happen by November this year. At this point in time, the energy availability factor, that core measure at this point in time, it's around 57%. Eskom is aiming for next year to be at least 65% and a year thereafter at 70%. Now, Moody's has cited this as really ambitious given the targets and obviously the difficulties that the company is facing. And already they're also taking into account the track record that Eskom has, given the malfunction and obviously the unplanned maintenance. Already when we see the energy supply in South Africa being inadequate, that is hampering economic growth. I mean, the Reserve Bank locally has come out to say just the energy supply issues are costing the economy around 1 billion rand a day. So it just shows you that obviously this as one of the key measures, if they do fix at least half of those issues on that laundry list that you talk about, at least that will also increase the energy availability factor to that 65% that they talk about for next year and hopefully the 70% that they talk for 2025.
Let's conclude on company news, and it's something that obviously doesn't talk really to the numbers here, Matete, but Trade Union Solidarity accusing Kumba Iron Ore of negotiating in bad faith in the 5th and final round of the wage talks. Now, this is raising the odds of a stalemate, which could culminate in industrial action. What's going on there?
So look, I mean, already we know that it's been a long history between the unions and the mining houses in South Africa. I mean, if you want to think back to Marikana, I mean, this is one of the things that we know that has been part of our history in terms of the mining sector and also the unions. Now, the labor relations between Kumba and the unions has been traditionally very stable relative to other areas of the mining industry. But as you say, it is raising the stalemate, the odds of a stalemate, which could result in industrial action. But I don't think, they will go that far. Already there's been 5 rounds of negotiations. Already Solidarity, NUM, and AMCU are demanding wage increases in line with the average inflation. Now, don't forget that average inflation at this point in time is obviously above the 6% that we keep talking about in terms of the Reserve Bank. Just this past Wednesday, it did print at around 6.3%. So obviously this is going to be a bone of contention for them, especially given the ever-escalating, hiking interest rates that we're seeing, also the inflation that we're seeing. So the wage talks also come on the back of commodity prices that are especially volatile, given the fragile post-recovery COVID-19 sector, and also the fact that China is not doing well. And also remember that Kumba, like some of its other counterparts in the mining sector, that has also been impacted from a revenue perspective, especially with Transnet rail inefficiencies that have cost them quite a number of billions in export revenue. Now, they did issue a statement yesterday saying, look, they are negotiating with the unions. Those negotiations are ongoing. They've made good progress, and they're trying to make sure that they reach an amicable agreement that will obviously be in the best interest of the employer and also the rest of the industry. So I think at this point in time, after 5 rounds of negotiations, I think they are a step closer. It's just a case of them finding each other in terms of the numbers, and I think at that point we could at least alleviate that industrial action.
Matete Thulare is head of foreign exchange execution at Rand Merchant Bank. Let me thank you very much for that markets update.